This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with Alex Suarez, co-founder and chief legal officer at Door Capital Partners, LLC, and managing partner at Suarez Law Group. Door Capital Partners is a private equity firm investing in hospitality assets to increase its value and revenue through efficient management and a passionate vocation to service to their guests. Suarez Law Group provides strategic legal advice to companies, private funds, and family offices with their cross-border business and investment projects. Alex, thank you for joining us.
My pleasure. Thank you for having me.
So what was your background before you started investing in early stage companies?
Well, I grew up in Mexico and I went to college in Mexico. Then I went to law school. When I graduated from law school, I started working for a big international law firm, Baker & McKenzie. I think at that time they were the largest law firm in the world. So I was doing a lot of cross-border work between Mexico and the US. And a few years later, I came to Texas to get a law degree here in Texas as well. So I'm licensed in both countries. I spent many years studying law. And then when I graduated here at UT Law, I got a job at a large law firm based in Minneapolis. I have never seen snow before moving to Minnesota. Had a great experience with this law firm. And I was doing a lot of international work with them. I was traveling a lot all over Latin America, helping companies closing deals in Latin America. I spent too much time at hotels. I fell in love with the hotel industry. And 3 years ago, with two good friends of mine and now my partners, we started Door Capital with the idea of investing in hotels, raising funds, raising capital to invest in hotels. And a year ago, just a year ago, January of last year, we started Door Capital Partners, and we are in the process of raising money, finalizing our first round to start buying hotels.
So what excites you right now?
Well, I think that the opportunity this crisis is presenting to everybody. I moved from the original feeling of disbelief and sadness when this crisis started. I think that I have moved to a point that now I find exciting to see how people, companies, and governments are adapting to this new reality. It's really exciting. This is triggering a lot of creativity and ingenuity. Believe it or not, I find excitement in the crisis that we're experiencing.
You see a lot of opportunities here and deal with a lot of investors. What's your advice for people investing in the startups in the hospitality sector?
I think that the main piece of advice hasn't changed, and it is that you have to really like hospitality. Hospitality is about serving guests and making people have a good stay when they are away from home. So there has to be a vocation for service. I've seen people investing in hospitality, just looking at the numbers, but not so focused on the soul of the industry, and they end up leaving pretty soon, sometime with results. But the most successful people in the industry are people that are focused on serving guests. That's one piece of advice, but also during this crisis, again, to keep the eyes open for opportunities. There are lots of opportunities. I think that in the crisis, the capital changes hands. If you keep your eyes open and if you are close to the right people, you will be able to jump into one of those opportunities and be part of that shifting of the capital that occurs in crises like this one.
And then on the other side of that coin, what's your advice for people running companies in the hospitality sector? What do you tell them to do before they go out to raise funding?
The hotel industry is in a great degree in surviving mode. Hotels are struggling and are restructuring to be able to deal with this crisis. That has opened opportunity to fresh capital, and that's where we play a role. People in the industry and the hotel owners have to make those changes to stay alive and to be able to be attractive to investors and get some extra capital to sort out this crisis.
And so, given the COVID situation and the reopening that we're going into, how do you see the industry evolving from here?
It will get smaller. I think that unfortunately, many hotels will not be able to continue in business. Example that we discussed at Door Capital when the crisis started is that we knew that we were going to start buying hotels soon. So we had to be very careful. This is like walking on stones on a river, and you know that some of those stones will sink. So you have to be very careful where you step. It's like that. So we are being very, very careful on what properties we pick. There are a lot of opportunities coming up. There were a lot of opportunities coming up in 2020. We think that we will see even more in 2021. We have to be very careful. The numbers that we are looking at right now are 2019 numbers, which look good, but we don't know when the travelers will go back on the road. So we're trying to figure out the future. I mean, it's not easy.
Right. So, what do you think the biggest change we'll see coming up in 2021 for hotels?
As a result of this crisis, we will see hotels cutting amenities, and this is something that will hurt mostly luxury segments or high-end segments. We in Door Capital, our thesis is to invest in economy and mid-scale hotels. Fortunately, we will not be dealing with that issue that much. Hotels in the economy and mid-scale sector, just a few amenities, just necessary. But that's a big change. But before the crisis, we were looking at several changes and developments in the industry, and I would say that right now they are kind of paused, but they will resume after the crisis. For instance, we were looking at mergers of hotel chains. In the past few years, we have seen brands creating new brands within their portfolio and new segments. Now you have brands like Hilton or Marriott with 10 or 15 brands within their umbrella. There is a brand for business travelers. There is a brand for families. There is a brand for business travelers that need a long stay. Segmentation is something that we were seeing happening in the industry. There's also the threat to the industry that Airbnb represents, and Airbnb is going to stay forever. So hotels are adapting to that new industry, vacation properties. So families will not use hotels that much for family vacations, and they're moving more into the Airbnbs. And even Airbnb was trying to lure business travelers. Another trend that we identified was with boutique hotels and independent brands. That was a segment in the hotel industry that was growing really fast, and they were doing really well.
So, what's your investment thesis for this sector? What's your criteria post-COVID?
We will stay focused on our original thesis because COVID came to prove our thesis. We are focused, as I said, on economy and mid-scale hotels in areas that have demand drivers, proven demand drivers like universities, government, and other demand drivers. And that's our thesis, and we will stick to it. The hotels that we are buying are in that, within those characteristics, and we are not going to change that. I think as I said, that the crisis just made us confirm that our thesis was the right one. We see that luxury hotels, for instance, are really struggling. Some of them are still closed. So that proves that our thesis was right.
What are the challenges in this space for the startup that goes into hospitality? Clearly, it's a different market now, but it seems like there's lots of opportunity.
I think the challenges are to make the investors feel confident that people will travel again. So when we talk to our investors, one of the comments that we hear is hey, when is people going to travel again? If we're buying a hotel, what is the minimal occupancy that we need to have to survive for the next 1 or 2 years? What if it goes beyond that? So that's a challenge, to be able to give them the confidence that people will travel again, that we are picking the right properties. For those properties that we're looking at, things should go back to normal pretty soon. And another challenge is to find the properties, as I said a moment ago, the right properties, the properties that will thrive. This year, for instance, we analyze maybe over 50 properties, and we pick one for an acquisition. So there's a lot in the market, and the challenge is to find the right ones.
Okay. So I guess the challenge for the investor is combing through and finding just the right one. What were some of the criteria you were looking for that right one?
We need to see those demand generators in the area. We need to see. We focus a lot on the area. For instance, we have seen properties coming into the market in Houston, right within the characteristics that we want. But when we analyze the businesses are surrounding the hotel, we see that they are heavily affected. That's something that makes us walk away from those properties. Right now we are analyzing, for instance, properties on border towns. There's a lot of traffic on border towns. Right now, the borders are only open for products, but not for people. So the occupancies are going low in those cities, but we are confident that the borders will open as soon as it is safe to do that, and the flow of people through the border will be the right generators that we're looking at.
Well, a moment ago, you mentioned luxury as a subsector was challenged. Are there any good subsectors inside hospitality where you think that part's going to continue to thrive?
I would say that the most economic sectors, you can think of the Motel 6, the Travelodge, the Roadway Inn, the Motel 8. Right now, it's even hard to find properties for sale in that segment. Those hotels have been doing really, really well. They are not focused on tourists or tourism. They are not oriented to business travelers, but they are oriented to construction workers, for instance, manufacturing workers, and those workers haven't stopped during this crisis. So those hotels have good occupancies and good rates, and their costs are very moderate. They don't have a restaurant. They don't have a bunch of amenities that luxury hotels have, so they can adjust their costs easily.
Well, in the last few minutes that we have here, what else should we cover that we haven't?
Not much. Maybe something that I would add is that most of our investors in Door Capital are foreign investors. So we wanted to put together a fund from a legal and tax point of view that is open to foreign investment. And because of my international experience, I have been talking to some people and some families in Latin America, mostly in Mexico, that they want to invest in the U.S. They want to invest in real estate in the U.S., but they don't know, how to do it, where to start. So we saw that opportunity, and that's one of the reasons why we created the fund and structured the fund the way that we did in order to attract foreign investors. So I think other funds and startup companies should also try to look for capital outside of the U.S. There's a lot of appetite outside of the U.S. to invest here in America and get a piece of what's going on here.
How best for listeners to get back in touch with you?
It can be by LinkedIn. My email is as in Alex Suarez, at door.capital. as@door.capital. And our website is www.door.capital.
Well, we'll put those in the show notes. Want to thank you for joining us today and hope to have you back for a follow-up soon.
Thank you so much. My pleasure.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.